to talk a little bit more, Jed, about today's market action. I guess we'll start with oil. You know how I feel about OPEC announcements in general. I don't get too excited about them. I don't really think they are anything, but I suppose we should acknowledge that there's allegedly a deal on oil supply, not that it's really doing a whole lot for the price of crude here.
Sure, let's acknowledge it, and then we can move on. Yes, crude right now, you can see it's down less than 1%. The president also tweeting that this deal to cut supply could be bigger than what we were expecting over the weekend. I don't really think it's driving a lot of the action. And frankly, having lived through the last 6 weeks, I don't even know that I call this a sell-off anymore. I'm calling it sort of a slow day right now. As you said, it's a little choppy. The Russell, we are seeing bigger declines there, which is kind of interesting given some of the notes that we had. Mike Wilson, who he's at Morgan Stanley, and he is pretty bearish. He's never a really excited guy. He's like, guys, it's not going to be great. He used the word wow when talking about what the Fed has been doing. And he also said that he is, liking the small caps in here. So having the Russell off 3%, I will allow that to be called a sell-off still.
Yeah, just speaking of some other calls, we had Goldman out over the weekend saying, perhaps this is the bottom on stocks. And, let's bring in Jared Blicker here for just, Jared, a quick conversation about where we stand on the consensus narrative that 2 weeks ago, everyone was sure we would have to retest the lows. That basically gets us to 2,200, give or take, on the S&P. As we trade right now, 2,750-ish, just below that level. And it seems like people are starting to give up on the notion that stocks must necessarily retest that level, which, you know what that means, a retest is right around the corner.
Yeah, you bet. That's exactly the narrative that I'm thinking, because it seemed like it just laid out exactly like the way you said. And then last week, people started coming to the conclusion, well, the pendulum has swung one way, so we need to reconsider that testing the lows theory right now. I'm not quite there yet, and I'll show you the price action in the S&P 500, why I'm not exactly there. So here's today. We did gap down. We had some pretty strong selling in the initial hour and a half, and we just kind of been consolidating. We have a wedge, and we'll probably get some kind of breakout into the close. The direction right now is down, but let's take a look at the year-to-date action, and we can see that we have come up to this 2,800 level. A lot of people have major support or major resistance, potential resistance from about 2,800 to 3,000. I think it's 2,950 to 3,000. Doesn't really matter. We have slowed a little bit, and I think part of that is just due to the holiday, which is fine because Europe is still closed today. Going to reopen tomorrow. And I don't want to read too much into the price action, but I mean, you were also talking about crude oil. And I think that there's something more to this. It's down at 22.45. I think it could easily dip into the teens again. This is just a really weak chart. OPEC Plus doesn't have the guns to commit to anything major right now. It sounds on paper like it's big, but it's really not when you consider that the demand destruction is twice as big as what they're talking about. And what they're talking about cutting, about 10 million barrels a day is already from elevated levels. So it's more like 7 million barrels a day. It's just not enough there. But if we look at the Dow heat map, we can see, here we go. This is the earnings play for tomorrow. I had this up earlier, so I was just checking these out. So why don't we just do that? J&J is coming out tomorrow with JP Morgan, Wells Fargo, going to get some interesting reads there. Jamie Dimon is the only CEO of a major bank who comes from the financial crisis and was CEO during that. I mean, you take a look at the year to date, it's just falling off a cliff. It's down 30%. And you look at the regional banks, I think KRX is down about 5 or 6% today. So it just gets worse. J&J is kind of a staples play and also a coronavirus play. So I expect them to be somewhat okay. But all in all, earnings season kicking off, there's going to be a lot of news. And I don't know that it's going to drive the narrative too much. Everybody's going to be looking for those bits and pieces about any kind of forward guidance. But I think it's going to come down to the raw numbers and cases and testing and, the other statistics that we're getting on a daily basis, Miles.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.